Okay, guys, landlord bookkeeping. Now, this seems to be something that always gets overlooked and forgotten about by landlords and investors. I mean, what do you think, Jim? How important is bookkeeping?
For most landlords, it's everything, honestly.
Yeah,
Cannot believe how many landlords neglect this. Knowing your numbers, especially before you even start to
yeah.
invest in property, is key and instrumental here. If you don't do that, you are heading for a casualty. I'll guarantee you that. You're heading for oblivion if you don't do this. This is what we're going to talk about today, the
Yeah.
5 separate areas. And I'm probably going to go in good personal insights. I've been this for 30 years. What's it, 40 years? It's like
Well, it's 30
over
odd
30
years.
years.
Yeah,
Yeah, and for me personally, it gets more and more attractive and more lucrative as we go. Even in today's environment, investing in property is probably the best investment you'll ever make. But this and knowing your numbers and about the basic booking keeping fundamentals is essential here. Debit and credit
yep.
is opposite and all the opposite and the other side, and the door and the window, which is what we used to get told in accountancy. It's like you debit to the door and you credit to the window, and it's like I have no idea what you're talking about. However, but I think I know the fundamentals. I think I know the fundamentals. I've got 3 awards for accountancy. Um,
I'm sure
so
you do.
I,
I'm sure
I
you do.
must be doing something right, and I've been doing this for years. And I do my year-end accounts myself, and then I just submit it to the accountant to actually to basically submit them online and do the final tax return just to make sure.
Mhm.
I don't want these bits, but the nitty gritty gets done by my daughter Tony and
Yep.
my other bookkeeper Elaine, and so they do the nitty gritty, the day to day stuff, and then what
Isn't it
happens
your
is
wife, Elaine?
I take it all together in a lump and I put it. I finalize all the balances and movements and that, and at the end of the year, and then I just submit it to the accountant. They submit it all for me after just
Yeah.
checking over.
I think that the important thing there is you've got the right people who are assisting you there. Because a lot of people might think, I can't do that. I'm not really that a whiz at
Fine.
doing like accounts and things. You just need to have a general knowledge and put things together and pass it over to the right person who can package it all up and get that submitted for your tax
If you've
return and
only
things.
got one property and 2 properties, this one's for you,
Yeah.
definitely. Because this is
Uh-huh.
just basic bookkeeping we're going to talk about. But I'm
Yeah.
maybe going to throw in some insights that will help you about what's deductible, what's not deductible, and the things that you can actually do to make you more tax efficient in terms of what you're doing. Not tax avoidance, remember that's illegal, but tax
Efficiency.
efficiency is probably the most important thing. Tax efficiency, I would call it nowadays, definitely.
Yeah, yeah, you're absolutely right. And there is a few hoops to jump through and things, but it's always worth looking how you could streamline it. And that's what we're going to try and break it down today. And we're going to, like you said, Jim, there's a few different sections we're going to cover today. We're going to cover that joy of organized tax and not just, you see so many
Okay.
people, but you see so many people and landlords and things that gets to that time of year and they're all over the place and it's such a stressful, and it doesn't have to be like that. So yeah, the joy of organized tax, separating your accounts. We're going to look at embracing possibly like landlord softwares that you could possibly use.
Possibly. You can do this on Sage, by the way, or
Yeah,
you can do it on
a
and I'll give
spreadsheet.
you a quick one. You could do it on a spreadsheet, and I
Yeah,
could show you how.
yeah, and making tax rules work for you. And then we're going to round up today talking about leveraging expert help as well.
Yep.
All right. So, much of that gets used handling. Much of this gets handled when you're using a managing agent. So, what's good about using a managing agent is you should have a monthly statement that will show your rents coming in. It'll have your management fees come off. Any repairs and things you do, these are all tax deductible. You've got all that each month, and they just get collated and submitted to your accountant, which makes it quite easy. That's
I
always,
would genuinely say if you're wanting a life, then use a managing agent
yeah. And,
because I'll
and we're
tell
not
you,
just saying that because I'm not just saying that because I'm a letting agent and
I've
a
been
manager.
through it.
Yeah.
I've been through it. I managed 40 odd properties myself. Maybe about 40 properties myself when I was working full time as a financial director, and it almost killed me. The stress you have to go under to do that, and even managing 1 or 2 properties for most people, they just don't want the hassle. I don't want folk phoning me up at 8 o'clock or 9 o'clock at night on a Sunday or something like that, asking me, there's something wrong with my boiler. What do I do about it? How do I adjust it? And then I've got to walk them through on the phone. That's the sort of things. I don't want people phoning me on Christmas Day saying the radiator's falling off the wall and you're going to have to come out and sort it. And then you've not got an engineer which can come out. That's important as well to have the right team because we have people that will go out on these days as part of property management because we've got scale, we've got clout, because we get these contractors to do a lot of jobs, so it's a lot of money to them, so they will do something for us. Whereas the majority of people don't have that. They just got ones and twos they do with them every single year, if anything. So when they ask them to jump, they don't say how high. They say, I've had something to drink and I ain't getting in the car.
And I'm not doing it, And that's like you say, it's one of the other advantages of using a managing agent, because we passing on, as an managing agent, we pass on a lot of work to certain contractors, and they are loyal to us and will do us a lot of favours and keep things cost effective as well.
Yeah, I definitely say that's the case. I was going to say that you use the one about jumping the car because they've had a drink. I'm not saying they come out because to us, because when they've had a drink, that's just the excuse they use. Most of them use is the fact that they can't come out. They don't want to say they don't want to come out. They just want an easy option out is, I've had a drink, I can't drive, so therefore I can't do anything. And it's like, wait a minute, but you're next door to me. It's only my boiler next door. That's the problem. You're only next door. You can walk round. I'm only kidding. They're no next door. But imagine if you get caught out like that. You're just next door.
But yeah, we're going to kick off and talk about the joy of organised tax. And people might think, oh, the joy of organised tax, but I mean, it's not going to be on par with that excitement you get when you go away on holiday, or you're breaking
Richard,
off.
I will stop you right there. I love tax.
Well, some people, I was just going to say, some people do, and that feeling of being organised is very satisfying.
As a subject, it completely floats my boat. I excelled in tax to the point I got a distinction in my exams, and as my higher master diploma exams, I got a distinction in that, and that means it's beyond 90% in terms of pass rate for your exams. And the reason I got a distinction is because it is numbers, and it's completely logical. And it works when you know and understand how it works. But what I've learned over the years from that point, because that's over 30 years now. God, that's over 30 years now. What do you know? It's now I understand, because I've looked into it, how to get the best out of the tax system. What's deductible, what's not deductible, and how you can use it to your advantage. Yes, you can use it to your advantage. I pay a marginal tax, and I'm going to tell people this, a rate of around about 8% a year.
Okay.
PAYE pays you 35% a year, marginal. And that shows you exactly how, and that is perfectly above board.
Not avoidance.
No.
Efficient.
No, it's efficiency. It's tax efficient. Perfectly applicable to do.
Yeah, and that all comes down to you're very organised when it comes to your tax. And I think, if anything, the advantages of being organised, it's your sanity and the stress. I mean, it's so much less stressful and less chaotic to be organised in the first instance than running about at the end. And it simply comes down to changing your habits. And that's the same with anything. Get out that habit of leaving things to the last minute and running about just stressing and chaos. No one wants to be trawling through emails and looking through drawers and old pockets for receipts. And if you're in that situation, change your habit and get out of it, because it's not a good thing to do. It's very stressful, and it can be avoided quite easily by being organised.
Can I show you what I've got? Organisation. Yep. I'll just show you. Here we go. This is all I've got. Look, November, October, September, August, July, and that's literally the receipts and the receipts and payments. So the income and payments, and here, that's it. That's how you categorise them. That's all I do. Put them in there, and then I just put them over in a file once I finish with them for the year for somewhere else. So I've always got records for them. But that's effectively how I do it. And for anybody, we'll talk about accountancy packages, but literally you could do that in a spreadsheet. You can just type these numbers in one side on a spreadsheet, other side on your income, your costs, and you're done. All you need to do is submit that to the accountant. You've got all the records here. So you've done all the donkey work, and you don't need to pay them an absolute fortune per hour.
Yeah, because I mean, it's always obviously good to get an accountant in and somebody that specialises, but you could also do so much that you don't have to do everything, because they will charge you.
Yeah, I've always done it like that, by the way, from the very start. when I've got investigations by the taxman, which I have a couple of times, they've walked away with a bloody nose. Because basically I've wiped the floor with them. And one actually had to pay me money back.
I bet they were delighted about that.
I know, because they've got if they're going to spend time on you, they're going to have to make sure they get something out of you. And it's like, no, don't come near me, because you're either going to pay me money back or you're going to go away with nothing.
Yeah, you're absolutely right. Yeah, but keeping all these receipts together and like you say, adding them as you go, or doing them and putting them on a spreadsheet or whatever you use, and then putting them across, it will help you obviously complete things a lot quicker, or help your accountant complete things. And that's where you start that preparation early on, and don't leave things till the last minute. And that's a good thing as well, because it'll give you a bit of an insight and let you know where you stand as you go through the tax year. Because a lot of people do that, leave it to the last minute, go through things, and they're like, oh God, I didn't know this, because you've not been keeping an eye on it, or keeping track of it throughout the year.
It's perfect if you're organised, you see. So before the year end, you can then decide if it's going to be a really bumper year and you don't want to pay too much. Because for some people, it might actually, if they're in their own name, it might push them higher to a higher rate tax band if it's in their own name. Or if they're in corporation tax, they might push them to the higher band to, I think it's 50 grand profit or something like that. And then it pushes them to a higher band for that as well. So before they get to the end of the tax year, and maybe about 3 months before, you could probably plan it. Whereas, say this, and you've got maybe refurbishment and repairs to do on your properties, then you could either say, I tell you what, I'll do it this year, or I tell you what, I'll do it next year.
And do that after.
Yeah. So you can stagger it in order to mitigate you falling in to a higher rate tax band. There straight away, this is worth its weight in gold, this information. It'll save you an absolute fortune if you follow it. I do all the time before I get to the end of the year. I just check my numbers are right. Okay, I've got improvements. I've got some things to do. Now, improvements aren't deductible, but we'll talk about what that is really. Then you can just move it to the next year and get it done just at the beginning, start of next year, and there it falls into there. By the way, I just said my marginal tax rate is just about 8%, but I remember I pay corporation tax on that money as well, which is 25%. So it's really 33%. However, I keep more in my hand doing it this way, the way I do it. Whereas my corporation tax pay for it. So that's the key here. I keep more in my hand. That's why I do it that way for myself. It's more tax efficient. I keep more in my hand, and that works for me better.
Yeah, and I think like keeping track throughout the year gives you that, a wee bit more clarity, and you know where you are throughout the year, and you can think, right, oh, I'm in the, here's where I am. And even like keeping, like you're saying, you've got possibly repairs or a new kitchen. That's one of your properties. There's a kitchen to go in here.
Richard, it just came up this morning.
Yeah,
I was just discussing it with the team this morning. Apparently, went to one of the properties, and initially they'd said 1,100 to sort the kitchen out, and then they came round and says, "I'll be honest, I've looked at it a bit more. You're probably needing to replace it.
Just take
it. It's going to be about 4.5. But when you take that off, the 1,100 you committed already, you're sitting about 3,000 odd. Now at that point, I just turned to Tony and I said, "Can we do 3 grand in our budget? Is it there? Can we do it? Is it flexible enough?" Yep. Okay, 3 grand, no bother. Done.
Yeah, I think I know what one you're talking about. But that just shows you're organised in that position. Yeah.
We would never know we were like that if we didn't make sure we planned and we knew what our cash forecast is. Obviously, I'm a bigger landlord in comparison to the 1s and 2s that I've got there, but it's still appropriate. If you've got 1 or you've got 2, you could end up having to put it out of your own pocket without even actually knowing it.
But the same rules apply even on a smaller scale. Even if you're just keeping money aside for possibly general maintenance, or a couple of thousand for a boiler or something, it doesn't have to be tens of thousands that you're having to think about. It could just be for those smaller repairs and maintenance.
I think it's also the fact that if you look at it, I mean, you might have an unexpected repair coming up that you don't know about, but you might have just gone, yeah, I've got plenty of cash coming in, I'm going to pay down my mortgage. And then you'd be like, oh no, what have I just done? Could I get that money back, Mr. Bank?
No, you're not.
No. We've got it now. We ain't giving you it back. And it's like, oh no, I've got to put another 3 grand out in my pocket. no realizing, and then you think it's happy days, and then you've paid 3 grand down against your mortgage, and then you realize, oh wait a minute, I've got a tax bill to pay on that 3 grand as well, but I've no cash left to do that. Oh, sorry, forgot. HMRC, am I okay just to pay that maybe later on? No. and that's what see what I mean, how so important it is. It's the first thing. I mean, I was speaking to Murray, you know Murray, when we were on Necker Island. I was speaking to him about it, and Murray was talking about specializing in something. He says, oh, I want to do something later on. I went, Murray, no matter what you do when you go to university, please just promise me, even if it's art, even if it's architecture, even if it's the most remote subject you'll ever know about, archaeology, promise me you'll get a basic understanding in numbers and finance. In other words, what is a balance sheet? What is a P&L? What is a cash flow statement? What is bookkeeping? And understand just financial record keeping at its base level. And he says, well, why? It says, because everything revolves around that. If you've got anything, and no matter what industry you're in, if you want to try and attract funding to that because you're in the charity business, you have to understand numbers in order to present something. In order to get that, you also have to report how you did to the charity trustees at the year end about how well you did in comparison to the money that came in, at what went out. You have to report all that. If you don't have a basic understanding of numbers, then you won't be able to help them at all. This is why it's so important to just get a basic understanding of finance. It should be taught as a mandatory thing at school, by the way. Mandatory.
At a basic level, it should be, yeah.
Of course it should. And yet we don't recognize it. We don't do that. And it's absolute lunacy. I think as well, engineering, just to throw that in, it's nothing to do with this. Engineering should be a basic understanding as well.
Yeah, the basic work, how things work. Yeah, you're right. I mean, that even when I was at school, balance sheets, that was nothing. I never learned that or anything to do with that until I went to college and done business. And I remember our class and the amount of people that did not last the first week, we just left. And we were on the same boat. We were like, this is really like over the head, but stuck with it. And the ones that stuck with it, we were all glad we did. But so many people just left. Because people just feel like so overwhelmed by it. And it doesn't have to be. I mean, as long as you've got a basic understanding, like you say.
So just to come on to that and just finish off here, you know, it will come up to the end of the year. You will be required to file. More and more people are getting brought into self-assessment as well. The way the government's moving towards, more and more people are getting brought into, unless, you know, no matter what you're doing outside of what you're doing, if you're doing anything there in the extra of a normal job, which is PAYE, then you will be involved in self-assessment at some point in time. And understanding that as base level is probably important, and keeping a note of your accounts, keeping a file of your invoices, just like that. It's as simple as that, honestly. Everybody thinks it's going to be difficult. It's like, no, it's a pile of papers with months in between. And if somebody goes, what about that? You then look at your records and go, oh, that was to do with July. And then you rake through your July receipts and payments and go, oh, here's the invoice here. There you go.
Yeah.
So let's look at separating the accounts then. If you own more than one rental property, your landlord bookkeeping can become quite a bit messy. And if it's all different payments and all different expenses, all jumbled together, including things like your rent received, your let management fees, your service contract, your let regular maintenance contracts, your expected or unexpected repairs for emergencies, and all the rest of it. And yes, there is not really a requirement anymore to keep separate records for each property. But when you put them in, you can at least have a wee column in a spreadsheet or in your accountancy package, which actually has a wee department which says that's to do with, I don't know, 57 Necker Avenue. That's to do with 75 Alton Road. That's to do with, you know, some stuff to do with my
I know where these are coming from. Yeah.
That's Lincoln Drive.
Lincoln will be your next one.
Yeah, so you know exactly what property it relates to, just in case you need to go back to a glance and say what property does it relate to. So at least you can understand where it is. So if you do come back at the end of the year to do some sort of analysis and go, flipping heck, how much did that cost me? You could do a quick sort in that column and actually sort it into everything with Lincoln Road on it and go, there's all the expenses with Lincoln Road, that totals like 10 grand. There's all the income for Lincoln Road, that totals like 15 grand. There you go. I made 5 grand.
Yeah, and it just keeps some kind of coherent like setup, and like you say, it's so much easier to locate and identify what something was for and where it was to
Well,
allocate to.
classic example. Would you know if you're running one of your properties at a reasonable profit or not?
Or you'd
You
need to
know,
look at all
is
the
it?
incomings and
Yeah,
outgoings. Yeah.
because you might be saying to yourself, this property's cost me an absolute fortune to run all the time, and it's like, but you're taking in 20 grand for it, and your margin's like 80%. So is it really costing you a fortune? How much profit are you making on it? What is your net return? And it's like,
And
oh well, I'm making about 20%. What you greeting it then? Shut up.
And the thing is, as well, it'll help you identify, like if you think, God, I've got all the outgoings on this property, like, well, what are all the outgoings? And if you've got several, say for a certain thing, I don't know whether it's roof repairs, is it worth looking at replacing this roof if it's going to keep costing me? Or do you know if it's the boiler, is it worth replacing the boiler rather than keeping fixing it? Do you know, that could help you identify things like that.
This is a classic example about when I look at this is a good insight into how you look at your return on investment. Once I've got the property I'm running, I knew my numbers in the first place, but if I need to go and do improvements, I kind of work out, does the improvement an improvement's not tax deductible. It's something you're doing additional to the property. It's not there already. You're not replacing anything. And I'm talking about improvements as an extension, or maybe even just a subdivide in between a room to create two rooms. And you think, or you want to put in double glazing is deductible now anyway if you're putting it in terms of single glazing. So there's a good one for you.
Double, yeah.
If you've got a single glazed property and you're thinking about putting double glazing in, it is now fully deductible. It doesn't go to an improvement because it's not changed, because you're not doing like for like. It's just accepted that you would normally replace it with double glazing. So that rule was brought in years ago. That's how I ended up getting my money back from the tax man about 25 years ago. And he went away with his wee hanky. I'm just setting myself up for them to come for me again.
You're going to, yeah, I'm just going to say.
But they've been for me recently, and they walked away with their tail between their legs again. So, hey, come and get me then. I'm ready for you. So that is a classic example. So if I've got to put it in, how much is it going to cost me to subdivide a room to make two rooms? And what's the investment to do that? Maybe 2,000 or 3,000. Just say 3,000. How much rent is it going to give me every month extra because the property is now empty? I'm going to re-rent it. It's going to be a 3 instead of a 2. So how much is the jump? It's going to be another 150 quid a month or something like that. So 150 times the 12 is 1,800 divided by the 3 grand I was going to do, and I've got a 60% return. I am doing that straight away. Because multiply that by 12 months and your return is 0.6 times 12 is just over 7 months. 7-month payback.
Yeah. It's okay.
So you could, that's a definite, you would do that. That would make absolute sense. It would probably add value to the property, even though it's the same floor space, because you've created another room as a result out of it. And that's the type of thing you've got to work out. What are the other things you have to think about as well?
Yeah, I think if you're categorizing things and separating your accounts, think about, like you say, there's general maintenance things as well, but also your legal compliance measures and things. So you'll be doing gas safety checks, you'll be doing electrical safety checks, you'll have your energy performance certificates, you might have upgrades that go with the energy performance rating and things that's coming up, your deposit protection fees, all these different things. And like you say, Jim, you just have these separate headers where the cost for each of these things is put under. And that gives you a clearer picture when you're reviewing things for each property. And it will come in a lot more handy when you've got several properties. But even if you've just got one or two, it's still good practice to do it. It keeps you on track and it keeps you with that clear picture of where everything's going and where all your outgoings are being allocated. Do you know whether it's safety measures or whether it's just general maintenance and things as well?
Yeah, and that's as well where you categorise for tax. So you have to have things like your categorizations are financial expenses. So everything goes under finance, because the tax report, you report it to the tax man in a different way. You report your tax, you report legal, you report finance costs, you report all these different separate costs, admin costs. You report that as well. Your gross rents. Your mortgage costs essentially, because remember your finance costs aren't necessarily your mortgage costs anymore, because the mortgage costs, if you're in your own name, have to be reported separately. That's key. So bank charges or finance costs is where we see expenses, insurance, rent, rates, service charges, repairs and maintenance. administration expenses or the finance costs as well, professional fees, establishment expenses. You have as well. You have the operating costs, normal operating, professional fees, accountancy fees, as I said, legal fees, and professional fees. And then you also have your normal interest and similar charges, which is bank interest.
Yeah.
So that's another thing you have to categorize as well. But these are all easily done if you start it. So start as you mean to go on. That's key here. I think that's the most important thing. Start as you mean to go on. Make sure you've got all that legally, all these things separate, like what you said about legal compliance measures, electrical safety certificates, about energy performance, your policies as well for rent protection.
Yeah. So,
if that's, insurance, contents, building cover, public liability. Landlord insurance. Well, we did a landlord insurance blog. It is on the post here, so you can click on that post, and it'll take you right to it. And it'll take you to the. If you go into that section, it has the landlord insurance blog, and it has the connection for protection money blog.
That link will take you through to the show, the blog, the podcast, and that's got a lot of good tips for reducing your premiums and things.
Your premiums, definitely, that's key. I've just had a factor put a budget out to me. I've got 4 properties in an area of 40 properties I own there, and they've put it out, and I've written back to them and going, wait a minute, how's your insurance cost budgeted? How's your insurance cost just budgeted to go up 30% next year? What's going on?
Where's the evidence for that?
I know. Where did you get 30% from? It's gone from 10 grand to 13 grand. It's like, I want to know the answer to that. Yeah, I think with their block policy, every man and their dog, it seems to get something wrong with their house, is claiming on it, and I'm having to pay more and more for it. But that's what you get when you get caught into a factor. Everybody else thinks it's great, but you're having to pay for them. Now, in the scope of things, it's minuscule for me. But if you only had 1 or 2 properties without a factor, you'd be nailed to the wall. You'd be paying effectively what they've forecast here is 98 quid a month for 1 property.
And like you say, if you were an investor and possibly were just on the small scale and bought maybe 2 or 3 in one block there, you'd be struggling.
That is almost at the point in my place in Spain. It's got a swimming pool and everything with it, and manicured gardens. And what am I getting for that? I'm getting a wee bit of cleaning in the hall. I'm getting a wee bit of cleaning outside, and a landscape in my garden, which is minuscule.
It's just a border. It's not even a garden there. It's a border.
Yeah, and something to do with health and safety, which is, give me a second.
Health and safety at that.
Yeah. Health
is that
maybe
like the balustrade or the banisters?
I have no idea what they're talking about. But I'm not going to fight the fight everybody else, because, and you know, there's 36 other people in this thing. It's like, I couldn't care less. I have tried this before, and I've got them nailed to the wall when it was up at 120, and that's why it's down where it is now. So I've saved it all these years, but I can't be bothered fighting that fight anymore. And all will happen. I just pass that on to the tenant. It's a rent increase because it gets absorbed. So I have no other choice than to pass it on and just keep doing that.
Yeah, but I think when it comes to separating your accounts, you know, we've just kind of demonstrated the complexity of how it can actually get. There's so many different things coming in. You might want to consider really separating your account, possibly by property. You might not want to do it, but per property. You can look at different, you know, there's some sophisticated apps and things, and we're going to move on to talk about that a wee bit more. Whether you want to go down that route, you can look at it, and they label each payments and things and separate it.
Colour. Tony uses colour.
And yeah,
I don't get it. I just do numbers, but Tony uses colour and it works for her.
Some people are a lot more visual than, you know, others. So colour really, they associate it with, right, okay, this, and it helps them separate it. And it can be easy to kind of underestimate just how many payments go into and out of your account for every year for your buy to let. And you maybe thank yourself for having something in place like that simplifies it and provides a wee bit more clarity.
Yeah, definitely.
And that does bring us on to, and I know this is something that you're not a big fan of. You did mention Sage and things, but embracing landlord software. Now, I know, Jim, you're a big fan of just your spreadsheet. And, you know, technology has evolved a lot, and spreadsheets are, some would say, being surpassed by these software designed specifically for rental properties to make your landlord bookkeeping less of a chore.
Yeah.
Be careful not to overcomplicate it, though. I think that, for me, that's the main thing. I know, like I say, you love a spreadsheet, and I think a spreadsheet is all you really need. to just, and as long as you've got it all categorized correctly, and not overcomplicating it with some fancy dancy software that you might have to pay a subscription for and things. I mean, what's your thoughts, Jim? Are you faithful to the spreadsheet, or is there other things that you use?
Well, I'm looking online straight away and go purchase Sage accounts. Now, there's no rocket science to Sage accounts, a standalone package.
Yeah.
And apparently on eBay here now it's going for £135.90.
Right.
Now, you don't need to buy into the
that's just a one-off.
Yeah, you don't need to buy into the online
thing,
the online maintenance every year for your Sage accounts. You can just have it as a standalone product on your laptop.
Yeah.
You can do that with other one is Xero. So Xero's another one. All of them want you to buy into the monthly fee. That's the key here. Yeah, the subscription fee. I mean, you know, you can get Xero. It says here you can get the Ignite package for £1.60 a month. Like that's it. Now, what that gives you, I do not know, but they're obviously wanting to hook you into getting, enter 10 bills, that's it. So, and it's a visual financial performance, basic. So that's what it's kind of giving you. I could actually, I'm a big fan of, I'm a big fan of just getting this up on a screen and sharing it and letting people see it. So let's get that up on a screen and let you see it. So here's Xero. If we can get that up here. Let's just share the screen. Let's just go for it. That's the wrong button. Shows how long I've been doing this. That's the wrong button again. Share screen. Here we go. Here we go. Price plans. So there you go. So there you go. You've got Xero here. You can see that.
Yep.
So you've got Ignite, £1.60 a month, £3.70 a month, £5 a month, £6.50 a month. The ultimate £6.50 a month, which is, I don't know, 72, 80 quid a year. There you go. And that's buying into it. So you buy into it, you get your invoices, all the rest of it. You get unlimited everything. You get up to 15 make online payments, domestic up to 15 of them, 20 pence per additional bill payment. You can do payroll for up to 10 people. So these are things you probably won't even need because you're not paying anybody. You're not working with anybody. You're not able to do anything else. They do have things like claiming and mileage and all the rest of it, advanced KPIs. And I think personally for me, I'd be starting off on the basic and seeing how I get on.
See how it was,
easily you can buy into it and you can do that. Now, Sage. Let's look at Sage. Buy Sage online. Buy Sage buy Sage accounts. Okay, so Sage accounts, it's got on here. There's the £1.35, 135 to buy it outright. I think that's for the whole year, version 32. There'll be I think there's no ongoing costs with that. That's an eBay online. See, people have got Sage 50, 2016. In all honesty, if you're not doing taxation with it, it'll not make any difference. It works perfectly well. There's people got it at £7 just to buy it, a pre-owned version. You're just buying into a standalone, and it just runs on its own. So you could buy a standalone, but equally, as I said before, you can do your spreadsheet. So let's look at. Let me just show you if I can get the spreadsheet up and let you see how we would do a spreadsheet for coming in. Let's just share that screen instead. So we'll get onto the spreadsheet and then just switch over to that. We are going to share our spreadsheet. Share screen again. We're sharing the window. See the spreadsheet there? Yep. So easily, you've got income or rents, and then you've got outgoings and costs. And it's easy as that. Rents, okay. 145 Lincoln Road. You could put another one in there. You could put 35 Balgarvey in Cooper. And you could put your rents coming in, which is you got 450 this month. You can get away with downloading your bank statement. Actually, if you put everything through your bank, you can download your bank statement into here, and you could just rearrange it how you want. And then you've got your costs here. You've got maybe a boiler that you've had to put in somewhere, and you put the address in as well, and that's maybe been 2.5. and then you've got something else here. You've got another cost as insurance, which is another, what, 1,000 or something like that for the year. I'll just put in 1,000 there. And then at the end of the year, you go, I tell you what I'll do, I'll just total that column, and then I'll total that column in here. And lo and behold, there's 900 coming for the year, and you've got 3.5 grand you've had to outlay. Now, it's not going to be like that, but this is a basic understanding of how that works. Yeah, your income, your costs. And then so you take one away from the other, plus that one, minus that, the costs. And then that'll give you what you've got as your net profit for the year. And that's easy enough done. And as I said, if you do it in that capacity where you've got it as your files, where you just come back to the ones that you want. So when you submit your spreadsheet to the accountant, he goes, yeah, that looks all right. There's all your finance costs, you got them separately. You could even take a heading and say finance costs. If we jump back to that, let me just jump back to that again. You could take your heading instead for your spreadsheet, and you could do finance costs. You can do, so you could do rents, and then you can do other income. So you could do other income if you've got other income. And then you could maybe have this as all repairs and improvements. Or repairs, just put repairs. And then you could maybe take that out and have your, I'll just do that, and I'll paste it down here. Paste. So you could have that as your insurance. So you could put your insurance there, and then you could have maybe your mortgage interest. And then what you could do in here is your rents. For here, you could have, here's all January's rents. So you could put January, and then you could put under there, you could put here's all February rents. Here's all, so, you know, you can just put totals in there now for the rents. You don't need to put the individual properties. You go, well, in that month, I got 3,500 in rents. In the February month, I got 2,500, because again, you've got them all in that file, these files that I said there. So you could have just subtotals. You could put repairs. Well, for February it was that, for January it was that. So you could again do January here. You could do February there, and then you could just total up summaries. So February could be 1,000.
If your accountant or the tax man then question it and come back and want to see, because you're organised and have that, you could say, oh well, here it's here.
So you could actually put the headings on either side, and you could put the months for these headings, and then just total up each category, and then total up the end result at the very end, take one away from the other, and it gives you net profit. So there's kind of a wee more detailed insight into how you could do it on a spreadsheet quite easily. And then you've got a record of it anyway, and you've got your record sitting here. So when you submit it to your accountant, they go, yeah, that looks all right. You've done the donkey work. You've saved yourself an absolute fortune. But if you take that, you've got the now, and just give them that, they'll go, oh, we'll have to wade through and do everything you've done, and they'll charge you a hell of a lot more than what you would be charged to do. Especially if you're on, I don't know, if you're on 30 quid an hour. Some people will go, bloody hell, 30 quid an hour, I'd love to be on that. Times 37.5 times 52, that's 58,000 a year. But they'll probably charge you 30 quid an hour. So if you're not making more than 30 quid an hour on your normal day-to-day job, or if you can't make more than 30 quid an hour, then I would suggest you do that yourself. You do that donkey work yourself. If you're making more than 30 or 40 quid an hour, you can, you know, if you're making 60 quid an hour, or something like that, and they're going to charge you more to do it, then you'd still be better doing it. But if you're making more than what their cost for them to do it, just get them to do it then, and just keep January, February, March. And all the rest
you do that, you actually lose money.
Yep, and put everything through your bank, so they can do all three, because you've got all your bank. You've not got a cash and we receipts and everything you've paid cash for. Just do all through bank. Forget this. Carry on about, oh, pay cash to everybody because it helps the shopkeepers. That is bullshit. It puts everybody at risk because you're holding cash in the shop, especially your staff. Plus the fact, if you try and go and bank it, they'll ask you where it's from if you've got large amounts, why you're trying to put it in for money laundering and all the rest of that hassle. And then also, they'll charge you more than it costs to actually do a bank transaction.
Yeah.
To put every £100 of cash in. They'll charge you something like £1 for every £100 you deposit. And yet, if you do a bank transfer, or if you're doing it via a bank route and everything's done through the bank, your charges are usually like 25 pence per transaction. which is nothing in comparison. So don't kid yourself about the cash situation. It's somebody has to make somebody makes some money somewhere, irrespective. They're either going to make it if you're using cash, or they're either going to make it if you're using bank transfers and all the rest of it. So or cards. So, and that's probably the more efficient method. So don't kid yourself with this carry on and this what is effectively a chainmail system running about. What chainmail is, what they used to do is everybody used to write in the mail system. They used to write this letter and say, if you write this same letter to 10 other people, they will bring you good luck. But you have to do it or you'll get bad luck. That's the type of things you used to send around in the mail. And the mail used to get inundated with all these letters with the same thing, sending to other people. And everybody used to do it. And it's a way, I think, at some countries used to try and cripple other countries.
Overwhelm them. Yeah.
So my opinion of that is make sure you do it right. Make sure you keep your policies up to date and everything like that. And make sure it's not really complex as such. It's basic understanding. You could do a basic understanding of a course on Business Gateway. They do it for free.
Yeah. But yeah, I mean, a lot of these different softwares and things, they could be for single properties or if you've got a larger portfolio. But if you're using these kinds of things and they do have that like centralized document management, there is an advantage to that as well, because it'll update you on regulatory changes and reminders of probably crucial deadlines and renewal dates, and that'll kind of help you build that irrefutable audit trail as such as well. So they can be very
I'm not a big fan, by the way, of I've got new landlord software I'd like to demonstrate. It's like flipping it. Don't be their guinea pig, for God's sake.
No.
Use tried and tested systems. It might cost you a wee bit more, but free is expensive sometimes.
Yeah. And also what you say is a lot of these ones, the reputable ones, they do link through to your bank account automatically, and they could import and categorize your income and expenses and things, and reduce a lot of that manual time putting in dates and figures and things as well.
So let's talk about making tax rules work for you then.
Yeah.
I mean, it really isn't any secret that many tax advantages landlords are used to enjoy have gradually reduced over the years. I mean, your wear and tear allowance is no longer there. Your full deduction for personal owners of mortgage interest against your rent is no longer there. It's only a tax credit now at lower rate, which will probably eventually disappear, by the way. So if you've got them in your name, get them transferred to a limited company or get rid of them if they're going to cripple you. If you're a low rate payer all the time, it shouldn't affect you. But if it's been taken away completely, then you're not going to get any deduction at all against your mortgage interest. If you're not got any mortgage, then you're fine. You don't need to worry about it.
You don't need to worry about that. Yeah.
So these are the things you've got to think about. And so there's a lot of things being taken away as a result over the years, but that doesn't mean you can't use the current system to maintain or even increase your income, your profit as a result. So probably my best advice, I hate to say it, but check the government's website for every available expense that can be claimed. Some of it might be out of date, so watch for the dates, because if you type out what expenses and allowances can I claim for property rental, you might get something back from 5-6 years ago. And don't trust AI, because it could tell you a lie.
Yeah,
that rhymes, doesn't it? Don't trust AI, because it can tell you a lie. AI lie.
We've actually experienced that live on one of your shows.
AI lie. AI lie.
And I'm like, oh, that's not quite right. I didn't realize that at the time, and AI had given me the wrong information.
So check that, but also ask people knowledgeable. Go on landlord forums. You get landlord forums, but remember, even idiots have opinions.
Yeah. Much like other things.
Just make sure that it is right. I always advise people. I advise people on landlord forums. This is what I know, okay? But you should still check anyway to verify that's correct. I know it's correct anyway, but it's to give them some reassurance that, just check it. Just make sure. I heard that so-and-so, that's what you need to say to you. I heard that on a landlord forum that this is deductible, this is not deductible, this is the way you can do it. And your accountant will verify it more than likely. Yeah, that sounds right. That's a good thing to do. It's always worth having a really good accountant. I do have an exceptional accountant, because basically I've taught him like that over the years, because he's been with me all that time. So he does work for other people, and I keep endorsing him all the time. It's probably overwhelmed with work, to be honest. But I do that because it's going to give somebody an insight into somebody actually is knowledgeable at an attractive fee proposition. Not free, but fee. Yeah. So I think that's it's essential, and it's part of that. So also, when you grow your portfolio and you buy new properties as a limited company, to get a full mortgage interest tax relief and pay corporation tax on the profits, which is far less than the income tax if you're a higher rate payer. And it also ring fences your property, so you can be protected. Plus the fact, if you want to take income out, you can essentially take out in dividends, which will be taxed in the new year at 10.75%. And I think it's 34.75% respectively, lower and higher rates. This is why I say about your marginal rate. Just now it's 8.75. So basically, once I take my personal allowance into account, and then I take my 37,200 into account, and you're getting 50 grand income, you're only paying 8.75 on your 37,200 because you're getting your tax-free allowance included in that as well.
Which is still 12.5.
You're literally paying 3,255 quid on 50 grand income. So right?
Yep.
So you're 6.51% marginal rate. But you've still paid 20 or 25% on your income through your limited company. So for all these people that say, oh, that's no right, you should be paying tax. It's like, I'm paying 25%, 20% already. So I'm paying the same as what everybody else is. But you can see in that scenario, I'm getting to keep more in my hand. Whereas if I did PAYE, the company would get the deduction of the 25%, and I wouldn't get it in my hand. So the company would benefit from it, and you can't get it out really until you take it out. So you get it taxed again if you do it that way. Yeah. So it doesn't make sense to do that. So you get a tax deduction, but you get it taxed when you take it out. So you're better actually just taking it out as a dividend in that scenario. And then you could possibly, if you really want to, make it tax advantageous, because you know you're going to pay a higher rate later on, because it's going to build you're going to build your portfolio, and you're paying later on. Then take it out, get it taxed at the 6.51 or whatever it is later on, and then put it back in as a director's loan.
Yeah.
So therefore, what you're doing is you're making it as loans now, and they're not taxable anymore, but it's loans to the company you'll get back. So basically, you're just taking your money and putting it as a loan. So then if you ever need money and the company's got plenty of money, rather than having to get taxed to take it out, you just take it out through the loan route. Yeah, because it's already been taxed. So it's a great way to do it. By the way, that's not what Elon Musk and all that's doing. That's a totally different scenario. They're getting loans from their bank, and they don't need to pay back, and they don't need to pay any interest on. Work that one out. Yeah. Why would a bank do that? Anyway, that'll be another story.
That's a different story, yeah.
Yeah, that's a totally different story.
Yeah, but you're absolutely right. When you're growing the portfolios, you buy them through the limited company and things. Your mortgage interest tax relief and things, and the corporation tax is different.
Yeah, and for company-owned properties, profits are also tax-free if you reinvest them into, well, more rental homes. Well, that's not exactly right, really, because they will be taxable. The profits will be taxable, obviously, when you when you get it. And then when you get it and you reinvest it, then it will make more income for you. So company structures that include family members might also simplify estate planning, which is really good. So estate planning for legacy. So if you've got a big portfolio and you're wanting to break it up, so you can mitigate inheritance tax if anything happens, and you can use it to your advantage, and possibly use potentially exempt transfers through inheritance tax, which is a 7-year rule. You give away a gift for 7 years within the banding that you've got there now. After 7 years, it is then non-taxable anymore. And then you could do the same gift again in the value, and you could wait another 7 years, and again that amount will be non-taxable again after 7 years. So you can give it away that way up to your full banding, your null rate banding out, which is 325,000. So I could give away 325,000 worth of stock in my company to one of my children, or between the 3 of the children. Then after 7 years, if I don't die before then, that 325 is no longer taxable for inheritance tax. I can give away another 325,000 again in value, and then After another 7 years, that will leave it. So therefore, I've given away 650,000, which will no longer be inheritance tax taxable. So these are the sort of things you can do. There's also allowances through other routes on inheritance tax planning, but that's usually typical when you get older. But if you get your structure right in the very beginning, then it could be good. If you don't get your structure right, then and also some mortgage lenders will only allow you 2 directors and 2 shareholders. So if you've got a multiple family, you think, I'm going to give it all away to my family. It's like, no, you're no of the mortgage holders got anything to do with it, because they won't allow you to do that in their terms.
Yeah.
So these are the things. So understanding these rules goes way beyond legal compliance. It's about it's about maximizing your allowable deduction. So every penny you actually earn and spend worked harder to keep your tax bill as low as, here's the word, legally possible.
legally possible.
Not illegally,
Yeah.
legally, in the law, within the law. Ignorance of the law is no excuse. It's the first lesson I was taught when I was in tax in accountancy. It's the first thing. Ignorance of the law is no excuse. And the second one is, don't mess with the customs and excise. Not the inland revenue, customs and excise. Because customs and excise, which is the VAT man, has more powers than the police. Yeah. They can kick down your door just because they want to, with no explanation.
Yeah,
but it goes back. Customs and excise goes back to the days of smugglers. So that's how they were given these powerful, all-power duties, and they still have it today.
So if they really want to, they can. Yeah.
Yeah, and you know what they did with smugglers all these years ago? They just basically took them away and they disappeared forever.
I never seen them again.
Yeah, never seen them again. That's how the customs and excise dealt with them years ago. I'm talking about hundreds of years ago, by the way.
Yeah. Yeah, we're not talking about a couple of decades.
That's what happened to that boy.
No, but no, you're absolutely right. And I think what's important these days, obviously, ignorance of the law is no excuse. And a lot of people, oh, I didn't know that. Well, that doesn't.
You don't get away with that. That doesn't wear.
Yeah. So if you're going to play the game, know the rules.
This takes us nicely onto the finishing subject, which is leveraging expert help.
Mm-hmm.
What does that mean?
Well, I was going to say, you know, no one is an island, or just on an island. But anyway, I mean, in terms of your journey, and you can't segregate yourself as an island. And while it's entirely possible to be that solitary, self-managed landlord and do it all yourself, there's a lot of excellent help out there that can make everything a lot more efficient and streamlined for you. And as we said at the beginning, and I'm not just saying this because I operate as a letting agent and a managing agent of things, good managing agents have a list, and they should have a good list of tried and tested, reasonably priced contractors who can do a good job. They'll have procedures and processes in place which will make things so much more efficient, as well as handling these things like the legal compliance, the renewals of that, and operating in a way where they're implementing successful rent reviews, especially in the current climate. And that really then just produces that long-lasting tenancy, happy tenant, happy landlord, and a really fruitful investment. And do you know, that's, and at the end of the day, when everyone's happy and the investment's working, that is what you really want to happen. And a good managing agent can really help you do that.
I think I know that's essential, and I was just about to give you a perfect example. I was talking to the team this morning, as you know, and it was quite interesting, one of the properties that I had, and I'm just trying to see if I could find what I was looking for now. It's got it here. There was one of the properties which I've just had back from I bought from a previous landlord, and I think it was 589 quid or something like that, the monthly fee, the monthly rent. So I then went to Karen, and I was saying to her, so what we're going to re-rent it now? We've refurbed it, and the refurb wasn't, I think it was like something like maybe 15 grand or thereabouts. I bought it at a really good value, and I'm putting 15 grand in it now, and basically that'll bring it to the value it was valued at when I bought it.
Is this number 90?
Off the top of my head, I can't remember. Can you tell me what the rent for that is now? Is it something? It's either 90 or it's 56, something like that. I can't remember, but it ended up being like 700 a month. So it's gone up by about 180.
Yeah.
So it's gone up by 180 multiplied by 12 is 2,160 divided by 16,000 is a 13.5% return on my income, the improvement I've put in. So I've refurbed it by 16 grand. That money I put in for the refurb is going to get me a 13.5% return.
Yeah.
So, right, that's a good return. How much does anybody else get in their bank? And then that goes into the value of the property as well, because that's definitely more or less. I'm not going to use the word improvements, because improvements under inland revenue are classified as non-deductible. They're capital elements. In other words, they should be added to the balance sheet. So you're not able to deduct it against your profits. Improvements. So improvements, just to explain, now we can get onto this. Improvements, as far as from what I know, improvements is, well, I know that for a fact, is something that you're replacing that you're not replacing. It's you're putting in for new. Now, let me give an example of an improvement. I'm going to put a new ensuite bathroom in. A new one, a whole new bathroom. I'm going to create a new ensuite. That is an improvement. That is not a replacement. I'm going to put a new kitchen in to the kitchen that's already there. Well, that is deductible in full, because you're not putting anything new. You're exchanging like for like.
I always like the term, as betterment, using the term betterment, and I think that kind of describes it, because you're enhancing the property out with what it already was to something that's going to add value to it. Whereas if you're putting a kitchen in like for like, it's not.
There's an argument in a kitchen. If you put in a really top quality kitchen, you had a crappy kitchen before, that it could be a capital element and it's not deductible. But that really doesn't wear. The inland revenue is okay with that. That's just, you're putting in a new kitchen. That's it. Full stop. You're putting in like for like a unit, a 600 unit, and you're putting another 600 unit in. Whether it's gold plated or no is a different story.
The same thing, though.
It will still be the same thing. So it's like for like. You're replacing a bathroom suite in a bathroom, or you're completely refurbing the bathroom. The bathroom is there already, so that's deductible as well. But if you're creating something new, like an extension, or you're putting in, for example, I mean, you probably could get away with a subdivide for the internal wall to create 2 new rooms, but because it's minimal cost. But if you've only got one property, then it would show up. It would be like a sore thumb in your accounts, because you've only got one property. It's like how much would that property cost you to run? It's certainly as a one-off 3 grand plus all the other costs involved. So you would probably have to put that as an improvement as well, because it's something additional to what was not already there. Replacement of carpets, replacement of washing machines, replacement of what else in the property? Bathroom suites, kitchens, cookers, extractor hoods, smoke detectors,
your fixtures, your fittings, like your doors and your facings and things.
Heating systems, fixtures and fittings, facings, doors, everything that's there already you can replace, and it'll be deductible now. That's the way it's happened. It never used to be like that. It used to be a bit more draconian, but because wear and tear allowance was taken away and this was replaced in, I mean, you never used to be able to do white goods about, getting replacement value for that. It was either you got replacement value or you got the wear and tear allowance at 10% of your top line rent. But they realised that wear and tear allowance was costing them a fortune, so they took that away, the 10%, and just said, "Nah, we're just doing straight replacements now. You can deduct instantly off." So if you get a new washing machine, instantly off your profits, your rental income, and it's part of your profit and loss account. If you're doing something that's not there already, then it's more than likely going to go in the balance sheet. It's not deductible against profits. Check with your accountant to make sure before you do the job. And it's good to have a good accountant, a good tax advisor to help you most with your landlord and your bookkeeping, landlord bookkeeping, and tell you in every allowance and how to grow your property, your portfolio in the most tax efficient manner, and start inheritance tax planning now. I know you're probably in your 20s, but start now. It's so important. So important. Whole of the market and you know, mortgage brokers are really good as well. I use Kester Salimi, personal thing for me. He is excellent in what he does. I just leave him to get on with it. He has a team that looks after me, and they come up with what I need, and they just follow it through, and they tell me what I need, and I don't need to go chasing them all the time. That's so important for me. I know I could probably search about, I know somebody out there that's going to go, I can get a better fee, but you won't be able to look after me and be able to satisfy my exceptional needs. Because that's what I insist on. It's right up there, way beyond what you're ever thinking about what I need out of somebody to work with me and my team. That's key in understanding. So whole of market independent brokers know the best, and they know how to get the borrowing. They know the system well. They know how to remortgage as well, and they've often got cheaper rates possibly than that are available by going direct. The banks actually give them better rates because they want to encourage you not to go to their staff, so they can basically lay them off later on because it costs them a fortune to keep them on the books. So they're trying to push it out to mortgage brokers to do that. And I think that's the most important thing. So getting a really good team round about you, a managing agent, accountant, and a legal person is key here as well, especially if you have to. I mean, David Sinclair is an excellent legal person for eviction purposes, but David knows to go to my legal solicitor at Lindsay's. He knows when to go to them and say, this is beyond my remit now. I am, you know, I need you to take this over. And they work closely together and have done for several years anyway, so that he knows exactly when to pass it over. They know exactly when he passes over. It's been done properly in the beginning, so the eviction will still go through irrespective. I think that's key here. Managing agent, accountant, legal, and finance. These are the 4 elements that you need in terms of that. Estate agent, yeah, maybe. Depends if you've got a really good one, which will help you. But most are, I think, in it for themselves nowadays, because it's a seller's market, isn't it? So they couldn't care less. When it turns to a buyer's market, every estate agent will want your time. They'll be all over you. Oh, I'll look after you. And when it turns into a seller's market again, they'll dump you like a stone. That's exactly how they work. And I'm on stage. It's like, but I don't technically. Yeah, I'm not a person that actually, I've got the deal of the century and I've got this of the century. You do that, Richard, because obviously you're a letting agent and you know good deals that are coming up because you get them off market, because there's other landlords within our network actually looking to offload, and we'll often have a booker, you'll have a booker.
I'll have certain ones that I've got.
They're looking to invest. So that's key here. They're looking to invest. So you go straight to them first and go, this is where the numbers are. This is where it works. This is a good investment. And you just want to put a turnkey operation. The tenant's there already. They're paying money. We know they've got a good track record. So it's like, why would you want to reinvent the wheel and then try and get a different tenant and then try and take all the risk on about you're going to dig up something in the bathroom and the next minute, the floor's rotten.
Renovations and
it's crazy. And yet people are insistent they want to do that. No, I just want to buy something for somebody else who's got tenants in it. Look what I did with that portfolio, about 50. It's like, I'll buy them, give me them. It's like, hold the tenant, I'll take them. I have no bother. It's like, give me them. It's like, that avoids all the hassle, because I knew what was coming in income, and I knew I could weather a storm if some of them weren't paying, and I hadn't been told about it.
Yeah. But I think hopefully for what we've run through today, we've demonstrated quite clearly that there's always a way to achieve that higher tax efficiency and have a better running business. And it's so important to speak to an expert, like you say, Jim, whether it's your managing agent, whether it's an accountant, whether it's a broker, so that you are getting everything that you in place properly, and then you're entitled to and reclaim your most precious resource, which of course is what is that, Jim? Time.
Nobody lies on their deathbed and says, I wish I had more money. Every single person will sit there and say, I wish I had more time.
Yeah. And time is so precious, and to spend hours and hours of your precious time possibly costing yourself money unnecessarily when you have all these specialized people that you could turn to and do it for you and do it more efficiently and more importantly, and less of a time than it would take you. It's just a no-brainer.
So ultimately, you want to be a property time lord.
Yes. I think I know one of them.
Yeah.
But yeah, so, and there's a couple of linked other blogs in there. I think we done the long-lasting lettings, and there was another one for insurance and getting good premiums and things. So they're linked through on the blog attached to this. So you could also click through them, and there's lots of good tips on that as well in our previous blogs and shows. But I think that's it for today.
Why was this never available when I started?
You know what it is? It's invaluable information, and it's all right there in front of you.
I never had anything like this. I had to go and find people. I had to struggle. I had to go and work it out myself and reinvent a wheel, or I had to invent the wheel. The wheel never existed when I started. It's like I had to invent the wheel and work everything. Oh, honestly, Richard, when I first started, it was a Wild West in renting. There was no legislation. Well, there was the 1988 Housing Act, which was brought in for Rachman used to chuck everybody out in London, used to just chuck them, oh, you're moving out. And it's like, no, I'm not. Well, all your stuff's outside the window. It's like, you're moving out. And he'd come out with his fur coat on and everything, thinking he's Jack the Lad. That's Rachman. And then Van Hoosenfeld got involved as well. And that's what brought in the 90s, the housing bill in the 90s, because he tried the same thing, and then they tightened up again. And then lo and behold, it's been tightened up again because the Greens got involved. Thanks, Patrick Harvey. Because I'm making a fortune with rent controls.
Yeah. So, but that was landlord bookkeeping for today. And as you can see, there's so many ways to kind of streamline it, be more organized, and get your time back. Any other information you want, feel free to jump out to myself in the comments, or I think my email address will be attached to there as well. And we'll leave it there until next time. Jim and I will speak to you later.
Bye for now.
Bye, guys.